Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo.
Hey, good day, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome you to today's session of how to make money trading stocks, options, and ETFs. I really like doing this free session. We're going to be covering today 5 stocks and a couple of ETFs, just to give you a flavor for what could be coming downstream going into the month of April. April is a month that oftentimes the markets will catch a bid and move up. We've had a fairly actually a really good first quarter. I mean, given where we started the day after Christmas, 2018, it's done extremely well. However, what's going to happen next? Great question. Again, if you're joining us with Facebook, hey, please do us a favor, share this content. I really would appreciate that. And also give us a good thumbs up, whether you're watching us on Facebook and or watching us on our YouTube channel. So without any further ado, let's get on to sharing the slides. Okay, again, this is Dennis Wilborn. I want to welcome you to the How to Make Money Trading Stocks, Options, and ETFs. So just a constant reminder that all materials are provided for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. I really highly recommend, this is the only recommendation I make, is please learn how to paper trade. One, it lets you get to understand whatever trading platform you're trading with. And it's better to make your mistakes on order entry and order exit and all that kind of stuff. Make it on, funny money. You're trading your paper money account. If you lose the whole thing, all you do is push the button and it replenishes it. If you're trading your real account with live money in it, that's not the case. They don't just come back and say, reset, and all of a sudden all your funds come back. So learn to make your mistakes first, or learn how to correct your mistakes utilizing the paper account. Your job as a trader is to wait for the best possible opportunities. Money is made stalking and sitting, not being active and trying to force something new every day. The objective of the session that we're going to do today is just a timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied. As I mentioned in the introduction, spring is often the time for a rally in the markets. Now, since we've had a really strong move since the day after Christmas last year, will we get that same type of rebound that we normally get in the markets? Right now, we don't know. I mean, it could be, doesn't have to be. So is it going to be a spring rally going into next week, or is it going to be a fake out or a breakout? That's the big question to ask. A couple of stocks I want to be keeping an eye on. We're starting to roll into the time where we can start planning our pre-earning run type trades. We've been very successful with those in the past years. Normally, we're probably hitting about 85 to 90% win-loss ratio on our earnings trades. A big name coming up in about 2 weeks, Netflix. We'll go over trading that today. And here's where we're sitting as of about 9 o'clock this morning. I'm up about 4% on the active trend trading system. And what you'll notice as we continue through the year, the indexes will stay about the same. They may fluctuate down, fluctuate up, But what our objective with active trend trading is just to add a little bit each month, until by the end of the year, typically we have beaten the S&P or beaten the indexes pretty significantly. We've averaged a little bit over 30% per year since the year 2012. So remember, hey, we're going to go to the charts. We learn how to be strategic. I'll cover a couple of other things that I'm working on. As one, our strategic compounding with our strategy. Two, took a little bit of a hit this week. However, this strategy, we started with $10,000. We're up 27% as of the close of business. As of about 9 o'clock this morning, and something that just dawned on me. We've been trying to make somewhere between $500 to $1,000 a week in strategy 2, and I said, well, what's missing from this? And then I thought about compounding. I think many traders do not take into account the power of strategic compounding that they do on their individual accounts to take a small account number and turn it into a larger one. So going into this week, okay, this will be the first week of April, and also the start of quarter 2. Our objective for this week is $636. That's 5% of our target amount. I will also be rolling over, and this is a copy of this, I will also be rolling over how much we finished the quarter with for our Q2 numbers. And so we're going to start afresh with our Q2 numbers, as you can see here. And so we'll just continue to record down. At the end of, and unfortunately that is not showing up. Let me make a little slight adjustment here. And that's why, there we go. Let's do that again. There we go. 13 compounding periods. And it's amazing. If you're compounding at 5% for 13 compounding periods, you can have some very significant gains. Our objective, our target at the end of Q2 is to turn this $12,728 into $24,000. That's the objective. And the other thing, what that'll do for us from a yearly perspective, that means of that original $10,000 we start the year with, it'll be up $14,000 for the total year. And so that's what our objective is. Here's another thing we want to keep our eye on. I like trading the utility ETFs, and here's a good one, Nat Gas. Nat Gas, as you can see, tends to go sideways first part of the year, and then catch a bid going into April and move up fairly significantly up until the June timeframe, then go sideways again. Then a little bit of a bust going, a move back up, a bid going from mid-August into the first part of October, and then kind of slack off from there. But just keep in mind, we'll be watching Nat Gas very closely in case we get a bid coming in here. And UNG is the title, is the ticker symbol for Nat Gas. And then the NASDAQ, again, NASDAQ tends to move sideways the first part of the year and then move up from there and basically catch a bid in April and move up the rest of the year. Now, is that going to happen this year since we've had such a strong beginning of the year? At this point, we don't know. But what what I've noticed about the seasonality aspect is, just pay attention, because the seasonality tends to be an undercurrent. The chart of the NASDAQ may not look like this at the end of the year, but oftentimes you can see where, April, there's a propensity to move up rather than down, and then May, June, July, and then we go into a little bit of lackluster July, August, into September, into first part of October, and then catch a bid there. So there's an undercurrent of seasonality that you just need to be aware of. Here's where we're sitting with gold. Gold's February-March timeframe has pulled back, and it appears as if seasonality for gold is basically hitting it pretty much on the mark. And so Pay attention to what we can do with gold miners, and that kind of stuff. Crude, again, crude has not busted out totally, but March was a pretty good month for crude, moving to the upside. We'll see if we continue to bust up from there. And then April 6th, we will have a monthly Bay and Moneymaker meetings, and we're going to be talking about the spring rally. Be ready for it. How to what things you can be doing now to be ready for this. If you want to kind of the Bay and Moneymakers is a good place to plug in to get started. Again, each meeting is about $15 to attend. And it's well worth it. It gives you access to actually about 90 days worth of training for the Bay Area money makers. And then premium members, of course, on Wednesday evening, 6:30, we do some technical training and also set up some trades for going into the rest of the week. Here's our team. This is my son Brandon, who is basically working with me now with the active trend trading system, and specifically with the market action point system, the MAP system. And then here's my lovely bride. This is, oh gosh, this was back it's a few years ago, but we lived in Hawaii, and I had finished up about 8 or 9 years of teaching myself how to trade at that point, and then transitioned to do it more full-time after I retired from the Navy. And Michelle still looks the same as she did then. And then here, of course, is Brandon, Sharon, his lovely wife, and our 2 grandkids. And so that's the Wilborn, folks. Now let's take a look at the charts I wanted to show you, and then we'll conclude very soon after that. Okay, weekly, daily. Weekly chart is my anchor chart in this case. The daily chart is my action chart, if you will. As you can see here, what we've got going on is, okay, last week, what happened? We had basically a shooting star type of candlestick. Sellers came in up here just above the 182 level, drove prices back down. What have we had happen this week? Well, came back down on a weekly chart, looked to catch a little bit of a bounce off the moving average, but look what's going on here. The momentum indicator, the TSI, is not really just jumping right off the page to move this pack up. You need to take out that high for the uptrend to continue. Are we going to pull down a little deeper, like back down to the 50-period moving average? We shall see. The 40-period moving average on a weekly chart corresponds to these the 200-day moving average on a daily chart. So that would, pulling back to here, would basically be a pullback into here. Into this level here. If that in fact happens, what we'll be looking at is, guess what? Taking out this swing low, and then you would have a series of lower highs, and if we take out that low, a lower low. That could set the tone for things going into Q2 and even later on in the year. Q's basically the surrogate for the surrogate for the NASDAQ. Similar type situation. We had a really nice shooting star last week on a weekly chart. But note the TSI on a weekly chart has not rolled over yet, but it's approaching a level of resistance where the momentum doesn't tend to get much higher than what it's been. We're holding above the 20. Right there. So we have support down here about the 176 to 177 level. Break through that, then we're probably going 175 and just stair step it down. Hit the levels of the moving averages on the way down, and so all the way down to about the 170 level. No indication that a sell-off is going to kick in and just rip things to the downside. However, a deeper pullback in the context of this uptrend would actually be healthy for us and give us a better opportunity to get in for a longer lasting potential upside trade. So NASDAQ and the S&P look to be about the same strength level right now. And then throw in the Russell as represented by the IWM. And here's something that's really interesting. Look at this little, what we've got going, stop it. What we've got going on here. We've got we fell down, back to the 50-day moving average, bounced back up, fell down again, bounced back up. And so what we've got going on here is what? Lower lows, lower highs, lower low again. And now, is this going to represent a lower high? You know, right now, we don't know for sure. So the good side of the chart, it appears as if it has reclaimed the 50-day moving average, and it will probably, it may close above that. However, we are still in a downtrend, and so price action could very easily just slip right up the edge and move back down. TSI weekly chart has crossed over. The market forecast, longer term momentum has rolled over. And so we'll see. Could this move up just a little bit higher? You betcha. One of the things we can take a look at is there symmetry in the move? And I'll just throw this up there really quick. I'm only going to do one of them. Is you go here to this low here. Nope, this low here. Come on. Okay, I want that low there. No, it's not grabbing my low. This high here. Back down to this low here. And as you can see, we already have, or we're really, really close to reaching symmetry of this last move back up. Symmetry would be at the 154 level. At 154, that could result in, that's as far as we're going to go. Hit that extension level and roll over from there. Again, symmetry is, how far have we run in that time frame? Just be aware from this move here to this move here is about $5, let's say $5.84. And right now, how far have we moved on this most recent move back up? In other words, the bear flag that we're working on right now. Go here, grab that low there. There we go, up to that high there, $5.57. So we're about 34 cents away from making that 100% retracement or symmetric move with this move over here. What about time frames? Where we went 1, 2, 3, 4, 5, 6 days up, 7 days up. Right now we're working at 1, 2, 3, 4, and so it could go up a little bit further from there. Jumping over to the stocks I want to cover for everybody is keep an eye on this one. Let's start with Netflix. Now, what am I looking for? What am I looking at Netflix to do? Well, first of all, we have to be aware that Netflix has earnings coming up on the 16th. I think I reported on the 14th, but it's actually the 16th after market close. So the 16th of April is actually Tuesday, week after next. I would like to buy some, I can do this a couple of different ways. I would like to buy some Netflix at about between $350 and $348 with the expectation that we're going to reverse and move up from there. I can do that in a couple of ways. I can basically buy the stock itself when it gets down there. appropriate, whatever, you have to size that position. But again, 350 to 348. I would like to, to get onto that trade prior to moving up on its pre-earnings run. Secondly, I could, when it gets down there at the 350 level, I could buy a 60 to 70 delta call option that expires, let's say that would expire the week of earnings. So if the week of earnings is if earnings is on the 16th, the option that would be the option that expire on April 19th. And there's a little bit of there's a little bit of plus in doing it that way, because that's also monthly option expiration week, and they will tend to have an upward bias during that week. So something to keep in mind. So a couple of ways to trade that. Moving right along, Google. And you may sit there and go, man, Dennis, why are you trading these really expensive stocks? Well, did you know that there's method to the madness. Oh, come on. And I'll show you what that basically is here. If we can get Google to. So as we can see, Google is finding some support right here at the, let me get rid of this fib for right now. Okay, as you can see, it's finding some support right here at its at this 34-day moving average on the daily chart. There's some stronger support down here, and it also that corresponds approximately to the breakout of this high, but there's some stronger support down here at this high, and that is at about 1173 level. Which is just above the 50-day moving average. It has not turned to move back up. It appears as if the TSI on the weekly chart wants to break further down to the downside. And that's okay. We'll just look for a pullback and then a pop higher. But Google looks good. Why would we be interested in Google? One of the reasons is that if you look at the range on Google, for the day, for a daily range, it's about $13.82. On the weekly range, the range on Google is $46. Here's the reason why we want to be looking at something like Google. Am I going to be buying a call or a put on Google? Probably not a directional call or put, but what I can do. Let's go over here and do this. And I'm going to go out about 2 weeks, right? Well, about a week or so, because next week. So what I like about Google is even a stock that is $1,000 stock, and as you can see, if I were to buy an at-the-money call that expires Friday of next week, it would cost me about $14.10. I'm looking right here, friends, right here. $14.10, or in other words, $1,410 for a single contract of Google. Now, I realize for a lot of folks, that's not a doable thing. And so that's where we want to be looking at trading what we call spreads, because now, as you can see, look at the split between, and as you can see, that's a $2.50 split between strike prices, which is absolutely awesome for a stock that's over $1,000, because I can place a trade here. Let's say I wanted to, I think Google is going to go up. So I'm going to, I will sell, let's say I want to sell the 170 put that expires next Friday. And as you can see, and I'll just bring this down to one contract so I could pull in a $1.10 for it. Well, what would the rest of the picture look like? I would be risking $140 to make $110. But again, that's on a $1,000 stock. These spreads, $2.50 spreads, are something that a lot of members can, in fact, premium members of active trend trading can do. The risk is basically cooked into the trade itself, so that what's my max loss if I took this trade? $140. So even with a smaller account, we could still trade a larger stock like Google. And so that's what I wanted to, that's what I wanted to share with everybody today, to say, hey, this is what we're looking at, and this is what we're premium members and the trend traders for the can look forward to, because that's what we're doing. Anyway, I don't know if this is a good trade right now or not. I'll probably look to set this up next week, because I'd like to see this reverse and move back up. But we have our ways with the premium members on how we look at trading those individual entities like that. So that's Google. Another one that we talked about, Netflix. Tesla is a favorite one we want to take, we'll keep an eyeball on. And I will just mention right now on Tesla, here's what's going on in Tesla. We are getting on a daily basis, we are getting a hanging man, which is a bearish reversal signal. On Tesla, the 20-day or the 2-hour chart is showing that the TSI is very overbought. This is a nice move up. Tesla is also getting a nice little bullish engulfing pattern on the daily charts. However, look what's going on with Tesla. Tesla is in a downtrending channel. Price action could move all the way back up here to the channel and then reverse off it like it did here and here, or it could get up to these moving average and reverse here and here. There is a time a time and price high somewhere about 285 for the high, and the timing on that high comes due on the 4th, between the 3rd and the 4th of April, which is next Wednesday or Thursday. That I'll be looking for the potential of Tesla putting in a high and then falling or retracing from there. We'll keep an eye. Does it have to happen? No, but that's the time frame that we're looking at. Let's see, Amazon. Again, another. We don't have a pure setup on this yet, but it is. Come on, there we go. Right there in the. Just look at these lows here, about 1755 to down to about 1745 is a great area where if that support holds, then we can look at Amazon continuing to move higher. What is our, and again, what is our 425 for earnings? So that's when we would start setting up these trades, because the earning trades can do really remarkable things for your portfolio. And so we want to keep an eyeball on those. So that's what we have there. Let's see, I got Tesla, I got Amazon, I got Netflix, I got Google. I will throw out one more, which is, I like this one, PNW, Palo Alto Networks. Works hand in hand primarily with our buddy Adobe. Okay, it has broken out. So a couple of areas just to keep your eyes on, friends, is just keep your eyeball on this area here, which is, well, here, let me do this. Let me do this for you. We'll get a price on this. Here we go. We'll just lay that across there. There we go. As you can see, 234.62. So figure 235. Price pulls down to 235. Look for a possible entry into Palo Alto Networks for a move back up into the either 250, needs to break out of 250, or the 260. This is in a buy mode. We're getting a pullback. Price action is above the 50, above the 34, all above the longer term moving averages, and the 8 and 20 are in the proper perspective also. So again, any time of a pullback into this level down in here, where these long wicks are, will give you a trigger to potentially get into a trade on Palo Alto Networks, work through the sizing. And if you have any questions on that, hey, you can always look to become a premium member of Active Trend Trading, and we'll walk you through exactly how we want to do the setups. But this is looking, Palo Alto Network is looking really, really good, for going into next week. So basically, my friends, that's all we have for today. I try to keep it to between 20 and 30 minutes. We have done that. And I will go back over to, there we go. Hey, I'm looking at 2019 being a year of completion. In other words, a lot of our members are going to be perfecting their ability to become basically master traders. And I'm really looking forward to your success stories. Keep the A growing. Trade wisely, trade profitably. And again, at the top of the hour, we'll get started with the final hour. Which is for premium members, where we talk about specifics that we could be trading right now. We'll be going into more depth on Palo Alto Networks. That looks really good for going into next week. If you want to know how to become a premium member, you can always shoot me an email, dww@activetrendtrading.com, and I'll basically share with you how to become an active trend trader. Again, from my home to yours, aloha, trade well, prosper, and have a great weekend. Mahalo. God bless everybody. Aloha.